Now friends, let me start with some of the small provisions with respect to the non-residents, and first of all I'll take up two separate sections, that is 44BB and 44BBB. Okay, both the sections cater to some special industry, a special type of business or activity, and there is something called as a presumptive taxation, okay, in both the provisions. Okay, now see, first of all, section 44BB, understand the hardcore basics, where assess is a non-resident, okay, and this non-resident is engaged in the business of providing services or facilities in connection with the supplying plant machine are to be used in prospecting or extraction of mineral oils, production, extraction of the mineral oils. Okay, that's the industry. So if the non-resident is providing his services or facilities in connection with this, okay, so basically it is like your non-resident getting income out of providing its services to specified industry. Okay, that is how we understand. Okay, however, if some of the specified sections are applicable, which is basically some special rate provisions and all that, then this particular section not apply. Okay, now in this particular case, the income computation, the rate is 10%. Okay, so this is your straight away presumptive income. So income multiplied by the rate and you will get the amount of the net income. So this is your straight away presumptive rate, which has already been provided. Okay, so that way it is very simple provisions. Okay, now friends, if you see in these particular provisions, assessee may also claim a lower profits. Okay, so here the option has been provided that if assessee wants to claim lower profit, that means say for example your profits are not 10%, but you are not making, you are having a lesser percentage profit, so you may even claim a lower profit. So if you claim a lower profit, you can still do that. Law permits you to do that. There is nothing wrong, provided that you have to maintain the books and your books of account should be audited. Okay, so these two sections, compliance extraordinarily you have to do, that is one of the point. And thirdly, there is one procedural clarification by the law, and the law says the assessing officer will proceed to make the assessment under 143(3). This is a scrutiny assessment. Okay, so if the assessee here in this section claims a lower profit, you have to have books, the book should be audited, and the assessment will be done by the assessing officer under 143(3). that is a scrutiny assessment. So I also call it as this type of the assessee in this section, if claiming a lower profit, will face a compulsory scrutiny. Okay, further, there is no set off of depreciation or brought forward losses. In other words, carry forward set off benefit is not available under this particular provisions. Okay, so these points that you have to remember, and subject to this, here the presumptive income rate which is provided is 10% under this particular clause. Okay, so this is one of the industry. Okay, now 44BBB provisions. Okay, this is also similar type only, where there is a specified industry and specified assessee, then you will have a presumptive taxation. Okay, but here one of the point very importantly that is applicable is that this section is applicable only to a foreign company. Okay, so only foreign companies will be covered by this particular presumptive taxation, and if you are providing or you are in the business of civil construction or business of erection of plant and machinery or testing commission thereof with respect to the turnkey power projects. So basically you are providing your facilities in connection with the turnkey power project. Turnkey power project is basically the important power projects. Okay, and these power projects of course should be approved by the central government in this behalf for the purpose of this particular clause. Okay, and here also the presumptive rate of income is 10%. So under 44BB also 10%, here also it is 10%. Okay, other things is almost similar. You may claim lower profit if you want to, but maintain the books, get the books of accounts audited, and there is a compulsory scrutiny. Okay, there is no carry forward set off of the depreciation under these particular provisions. Okay, so that is, this benefit has been denied when it comes to this particular provisions with respect to carry forward set off of the specified provisions. Okay, so this carry forward set off benefit has been denied to the assessee. Okay, further, there is one very special and the unique provisions of section 10, which gives a benefit with respect to some tax payment exemptions. But this I will explain this, because straight away to explain to you, you will not be able to understand. I will explain it with the help of an example. But this is one special exemption available with a special category, okay, with respect to a foreign company deriving income by means of royalty, technical fees and all that. But I will explain this to you with the help of an example. But give me some time. When I take up the questions, I will explain this particular section to you. Now friends,